Traders, Cousin Vinny coming to you from theclosingprint.com, March 14th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week, with the exception of the London Stock Exchange, the Nikkei, and the Hang Seng. Value continues to outperform growth as interest-sensitive stocks remain under the influence of the rising 10-year yield, where we see financials and industrials outperforming, in addition to energy and materials, while growth continues to move lower. The heat map has been improving. Most sectors are bullish. Weakest sectors, of course, being XLK and XLC, tech and growth. Starting off the week, we have 19 bullish indicators, 0 neutral indicators, and only 1 bearish. Short, intermediate, and long term, we are bullish. 3,800 for the S&P 500 is above support, and 4,000 is resistance. It's important to note that value continues to outperform growth at this time. Focusing on the industrials, only 30 stocks. However, we can see significant volume over the last week and a half as value continues to push higher, with the Dow Industrials printing new all-time highs, while adding 35 stocks to create the Dow Industrial Composite average, which is comprised of industrials, transports, and utility stocks. Transports most notably outperforming in recent weeks. Noting Bollinger Bands are opening up top and bottom, telling you to expect increasing volatility, while these value names continue to outperform. MACD is above its signal line and volume is increasing. With growth underperforming value, this line continues to drop in the upper panel. The middle panel is the growth stocks. You can see that we've gotten rejected at the 20-period moving average, and growth stocks outperforming, making new highs. So it's not my opinion, it's what the chart is telling us. Until growth stocks, namely semiconductors, technology, and communications, break above the 20-period in this case, we have to assume that this resistance level will continue to hold prices back. So we want to focus on value as long as it continues to rise. Given the top 10 stocks in the S&P 500 are all from the growth sector and represent 23% of the overall 500 stocks, removing that weighting is very important. We can see the S&P Equal Weight Index is making new highs as well. While the number of stocks trading above their 50-period moving average is currently at 74%, but yet to reach exhaustion levels or overbought levels. And if we continue to add more stocks, 1,500 in this case, the S&P 500, 400 mid caps, and 600 small caps, we can clearly see we're still on a buy signal. Histogram is making new highs as price action on these 1,500 stocks pushes higher, while zooming out to 10 years on this same chart shows us the number of stocks on the high-low percent of these 1,500 components has made a new high over the last 10 years, spiking, confirming improving economic conditions as represented in these stocks. Bollinger Bands continue to open up, while breaking down the components in the advanced decline percent, S&P 500 in the top, cumulative, mid caps, and small caps outperforming the latter, while all three are moving away from the 200-period moving average, showing institutions have been buying hand over fist. Adding yet more stocks, the Russell 2000 breaking out to all-time highs. RSI is above 50 and rising. Important to note, volume is increasing, and we have the rate of change indicator starting to turn So the momentum is just now shifting in this broad measure of market participation, moving to 2,700 stocks in the New York Stock Exchange. We're clearly above the zero line. Moving averages are rising, and the number of stocks advancing versus declining has just made a new all-time high, with the New York Stock Exchange following through. All green elder sticks. Until we see a blue elder stick or a red elder stick, we consider this a bullish trend continuation. And if we look at the Wilshire 5000 Composite Index, yet an even broader measure of market participation, we can see that we have yet to break out to new all-time highs. However, the cycle is just now bottoming, should see a follow-through. In previous occasions where we've had this overbought condition and the cycle turned, we've had nice gains. This isn't a promise, but given the previous charts, this looks pretty good for the bulls. We've also seen VIX more bullish of late as it continues to collapse, looking for higher highs and higher lows when this is green, albeit we have one bearish indicator, that is the VIX VXV ratio, in the red zone again. In the past, when we've moved down to this level, didn't necessarily mean that we're going to turn over, but there has been occasions where VIX VXV ratio, the front month to the 3-month volatility index, got into the red zone and we saw a pullback thereafter. Of course, that relates to other catalysts. Right now we have the US dollar rising and the 10-year as well, which is good for financials, energy, and industrials. Less so for growth stocks. Breadth, as seen with the McClellan oscillator for the New York Stock Exchange, is also turning higher. We're starting to see the moving average bottom and turn more bullish, while the New York Stock Exchange summation index of all those NIMO values continues to push higher. We've got a higher low. We could see the spike in the gray background. Every time it's moved above the plus 900 zone, there were no occasions where we retested the recent lows, rendering a more bullish view and backdrop for the equity markets. The bond stock ratio represented by the 10-year versus the S&P in the lower panel is showing us to be favoring stocks rather than bonds at the current time. This extreme could always turn, so that would be something we'd be watching for. Yields to pull back in dramatically for some reason, and bonds to bounce. Until then, we focus on equities over bonds. We also see the risk-on indicators like junk bonds, high-yield corporate debt continue higher. In the background, Hinkin-Ashley, that's the junk bond on the daily time frame. We can see that crude oil blue, IWM is red, moving higher, and of course biotechs making higher highs and higher lows. We'd like to see biotechs following through this week. That would give all four of our risk-on indicators a bullish equity scenario. The bearish scenario, of course, would be if all four of these started to drop for some reason, some catalyst we haven't seen to date. Until then, we want to be favoring equities. US dollar continues to create higher highs and higher lows, having broken back above the 50-period moving average with the 200-period just overhead. On occasions where the US dollar has risen, that would be a headwind for commodity prices. As the price of the dollar goes up, it takes fewer dollars to buy the same commodity. With the dollar moving higher, it takes fewer dollars to buy the same amount of gold or any commodity priced in US dollars. The same goes for Brent crude and West Texas crude, both of which are starting to move into areas of resistance. Crude oil being based in US dollars could impact prices in the short term. Watch for a little flag. This is generally considered bullish for equities as crude oil moves higher with a positive correlation. Together with crude, we see copper consolidating recent gains. This being another forward-looking indicator as well, we want to see copper continue to move higher. While outperforming, using a copper-gold ratio, we want to see this higher. That would be bullish for the economy if that continues, as it currently nears resistance. Therefore, considering bonds at lows, potential for bounces there, we see the bond stock ratio at an extreme. That could also turn. The CRB index is near resistance, and we had potential for some inflationary fears. There's always a possibility that we could see a little consolidation at the present levels as the S&P 500 and other indices reach all-time highs. We don't expect that they're just going to keep moving, so we watch for indications on Monday, and we'll let you know via the alerts channel and the live broadcast if anything changes dramatically with this picture. Sector strength has been improving, as we can see in the sector heat map from left to right. Each Friday, this is updated, showing more green coming into this last week, less red for the major sectors, with some weakness in technology and growth stocks, while the European indices and ETFs improve somewhat, with the exception of Southeast Asia. Overall, the investment picture is improving. Sector performance obvious in real estate, transports, energy, financials, industrials, growth underperforming as we're in the lagging sector and moving lower since about February 16th. We can see the reverse is the case for the Dow Jones Value Index, continues to strengthen, a trend which we can capitalize on going forward until we see growth start to turn higher. Stocks in the IBD 50, relative strength names, and stocks showing rising profit estimates on the opening monologue. The ones with the asterisks are favored. They have more indicators working. We have QFIN moving higher, about to break out. Volume increasing, showing institutions have been picking up shares from about 25 up to current level. Stochastics and MACD have turned, and ATR is at highs. ASML, though it is in the technology sector, semiconductors, we're looking for it to push above the 50-day. If it gets rejected, look for a rollover. For now, though, stochastics and MACD look strong. I prefer stocks that are in the industrial sector, financials, materials, or energy value as they continue to outperform. Avery Dennison looking for a follow-through. Financials like Charles Schwab continue to move higher, trending RSI above 50. MACD above its signal line, stochastics showing strength. Chegg looking for it to move back through the 21-day and the 50-day, similar to what we saw with Walmart and Microsoft last week. Cornerstone on demand looking very strong, back above the 9 and 21-day. Room to run, stochastics is rising. MACD has turned and stochastics rising as well. Volume increasing, looking for a follow-through. John Deere and Caterpillar both looking very strong, with Caterpillar breaking out of a 3-week base on volume last week. On Friday, MACD is turning and positive, volume increasing, looking for Caterpillar and John Deere to continue. The industrial sector outperforming. Digital Turbine following through, looking good. Dropbox breaking out last week on above average volume, MACD above its signal line. Generac Holdings showing up on many scans and watch list following through, looking for MACD to turn. Ingersoll Rand trending, MACD above its signal line, volume increasing, stochastics turning, RSI rising above 50. In mode trending above its 9 and 21-day, following through, RSI rising. IIPR, I really like this one, especially if it gets above the 50-day. MACD's turning, stochastics. I love stochastics set up like this with MACD about to turn. Just need to see volume increase, get above this volume by price line, and price above the 50-day. RSI should move through 50 this week as a product of price. JCOM from previous watch lists continues to trend. Look at the volume, that's institutions. They're picking up shares from 112 up to 120. So they're still here and buying. Lagon Pharmaceuticals, another one that we've been watching for the last few weeks. A couple of you have been trading this, like Grover. Looking for the follow-through. MACD has crossed. Stochastics rising. Looking for RSI to lead the way and price to get back up to recent highs. Yeti looking for a follow-through and a push higher this week. Stochastics is rising. MACD is crossing and RSI is moving above 50. Looking for it to move back into this range, especially as the spring and summer months approach. Yeti has an exceptional line of outdoor goods. Stocks in the opening monologue with asterisks have more indicators set up for a swing position. We can see ACHC following through. That's a nice stock setup. AMRS also pushing off the 9 and 21 day. PayPal, SMG, Scott's Miracle-Gro also looking very strong. Looking for a follow-through. With the stock showing, in addition to stocks showing rising profit estimates that we see here, the ones with asterisks on the list, HCNP and QFIN, as well as SNBR. Looking for follow-through, so make sure you check those out. In addition to stocks that showed up on scans, KRNT, Sony, SNE, Spotify, and TRN are all set up. As you can see with Cornet Digital, KRNT, pushing off the 50-day, nice bullish day on Friday. Volume, MACD, and Stochastics turning. These are the types of setups in this particular list of stocks from the Bullish Stochastic, MACD, and RSI scan. So make sure you check those out as we've listed here. The ones with the asterisks are the highest probability setups going into this week. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. I apologize for the tardiness of the video and the short length. I have a party that I have to go to. The daylight savings times really screwed me up today. I'll be sending out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. So make sure you check that out in your inbox. Have a great evening, everyone. Hope you enjoy the rest of your day. Take care, and we'll see you tomorrow. Ciao.